Masterclass Part 2, Market Structure and Liquidity. Now we move into the core of price action trading. If you understand market structure and liquidity properly, you can start reading a chart without depending on a pile of indicators. Number one, what is market structure? Market structure simply means, open quote, how price is moving from one swing point to another, close quote. There are four important terms: HH, higher high; HL, higher low; LH, lower high; LL, lower low price, bullish structure. A bullish market generally creates HH, HL, HH, HL, HH. Example, you can see the code in our conversation history. The important idea is price keeps making higher highs and higher lows. That tells us buyers are generally in control. Number two, bearish market structure. A bearish market generally creates LL, LH, LL, LH, LL. Example, you can see the code in our conversation history. Here, price keeps making lower lows and lower highs. Sellers are generally in control. Number three, what is a swing high and swing low? Before identifying HH, HL, LH, and LL, you need to recognize swing points. Swing high, a point where price moves upward and then starts moving downward. Swing low, a point where price moves downward and then starts moving upward. Don't mark every tiny candle movement. Focus on meaningful swing points where price clearly changed direction. Number four, breakup structure, BOS. Now we reach one of the most important concepts. Bullish boss, imagine the market is doing HH, HL, HH, then price breaks above the previous HH. That can be called a open quote, bullish breakup structure, close quote. It suggests that buyers have continued to maintain control. Bearish BOS, if the market is doing LL, LH, LL, and price breaks below the previous LL, open quote, bearish BOS, close quote. This suggests continued selling pressure. Number five, BOS does not mean instant entry. This is where many beginners make mistakes. They see price breaks previous high, buy immediately. That's not necessarily a good trade. A breakout can be genuine, a liquidity grab, a false breakout, a temporary spike. So instead of simply asking, open quote, did price break? Close quote, ask, open quote, what happened before the break and what happens after it? Close quote, context matters. Number six, chalk, change of character. Chalk is generally used to describe a potential shift in market behavior. Imagine we have a bearish market, LL, LH, LL, LH. Then price suddenly breaks above the previous LH. This can indicate, open quote, the bearish structure may be weakening, close quote. That potential shift is often called chalk. But remember, chalk's called guaranteed trend reversal. It is an early warning that the market may be changing. 7. Boss versus chalk. Think of it this way. Hey, boss usually supports continuation. Example, bullish trend, bullish boss, continuation. Chalk often suggests a possible change in direction. Example, bearish trend, bullish, chalk, possible reversal. These terms are useful, but don't treat them as magical signals. Number 8, now the big concept, liquidity. This is where price action becomes much more interesting. Liquidity, in simple trading terms, refers to areas where many orders are likely concentrated. One common example is around obvious highs and lows. Imagine this. You can see the code in our conversation history. Many traders may have short positions with stop losses above the high, breakout buy orders above the high. That creates a pool of orders around that area. This is why obvious highs and lows can become important areas for price. Number 9, liquidity sweep. Suppose XAUSD creates a clear high, price later comes back and moves slightly above that high. Many traders see open quote, breakout, buy, close quote, but then price quickly reverses downward. This is often described as a open quote, liquidity sweep / liquidity grab, close quote. Conceptually, old high, price takes the high rejection, price moves lower. The important part isn't simply that the high was broken. The important part is what price does after taking that level. Number 10, buy side and sell side liquidity. Two terms you'll hear frequently. Buy side liquidity, BSL, usually associated with liquidity resting above significant highs. Sell side liquidity, SSL, usually associated with liquidity resting below significant lows. Think above highs, BSL, below lows, SSL. Number 11, the setup we're building. This is going to become the foundation of our trading strategy. Instead of indicator, signal, trade, we'll build market structure, important liquidity area, liquidity sweep, structure confirmation, pullback entry, stop loss, take profit. This gives us a logical sequence instead of randomly entering because a candle looks good. Number 12. Example, potential buy setup. Imagine XAUSD is approaching an important previous low. Price does this. 1. Market approaches the low. 2. Price breaks below the low. 3. Sellers enter. Stops are triggered. 4. Price quickly rejects the lower level. 5. Price moves back above the level. 6. 5M structure breaks bullish. 7. Price pulls back. 8. Potential buy entry. The stop would generally need to be placed at a logical invalidation point and not simply a number of pips away. And number 13. Example, potential sell setup. Reverse the idea. 1. Price approaches an important high. 2. Price moves above the high. 3. Liquidity gets taken. 4. Price rejects the high. 5. Price moves back below. 6. 5M structure breaks bearish. 7. Price pulls back. 8. Potential sell entry. Again, the trade is not based on the sweep alone. We want confirmation. Shashek. Your first major rule, never think, open liquidity sweep, immediate trade. Close quote. Think, open quote, liquidity sweep, wait for confirmation. Close quote. That's a huge difference. The framework you should remember. Buy, sell side liquidity, sweep, bullish confirmation, pullback, buy. Sell, buy side liquidity, sweep, bearish confirmation, pullback, sell. One more important rule. Don't mark every high and low as liquidity. Focus on meaningful levels. Previous major highs, previous major lows, equal highs, equal lows, clear swing points, important session highs/lows, major support resistance areas. The cleaner the chart, the easier it is to make decisions. Next lesson, we'll take this one step further. Part 3, the complete XAUUSD entry model. We'll build the exact sequence. 1H bias, 15M structure, liquidity, 5M sweep, 5M bias, entry, SL, TP, risk reward.